Oh, damn. Sorry, we're going to go again. All right. I'm assuming everything I said in this area, everybody's got it. So I'm just going to go to this area, the very key area that I was at. For you to know that price is ready to go to the upside, if price is moving down to clear the liquidity on the upside, take note of this wicks right here. 1, 2, 3, 4, 5. Immediately price cleared all this liquidity. Price created its own liquidity. What did I say, guys? Immediately price broke all those liquidity. Immediately it took away all those monies. Price created its own liquidity. And what do I mean by it created its own liquidity? This is where the liquidity is on the left side. Now look around here. Immediately price cleared everything. It created its own liquidity. This is what I mean by it created its own liquidity here. And it came down to smash it. And there was one thing that Nana was always telling me that I always did not understand, because I did not like this W shape. But then I realized when I was back testing that indeed the banks are always going to go down to form a W shape before they actually move up. And how is a W formed? After price has cleared all the liquidity on the left side, it is going to create its own liquidity. What do I mean by the W? It is going to create its own liquidity here. And once it gets there, it push up, deceiving people that now we have clear liquidity, so we're going up, and all the way, everybody that decided to buy there, we smash you out and take you out. Now the W is formed and we push up to clear all the liquidity on the upside. Look at that, guys. Are we making some sense here? Was that explained properly? If not, let me know. I can go over it again. So until price has created its own liquidity and smashed it, never look to buy or never look to go to the opposite side of a trend. I want you to go and backtest this. Go to the charts and look at when price decided to create a W and went the upside in a sell way, or created an M and decided to go to the downside. It always had to create its own liquidity. Let's look, for instance, this area. As price was smashing liquidity here. Once it got there and it decided to come down, look at what it did. Created its own liquidity. Smashed it and dropped. How sweet is that? This is one of the secrets that usually I don't give out. This is how I could tell exactly when price is going to reverse. So I tell you that yes, I've ended my trend. I'm getting out of the trade. If I'm selling, I'm out of the trade. I know that now price has created its own liquidity and is going to get out. And this happens on every single time frame, including 1 minute time frame. What is the longest you've stayed in a trade for? The longest I've stayed in a trade for is over 5 weeks. And that trade did about, I remember clearly, it did about 2,300 pips. And it was a GU trade. I'm not saying that to brag. I'm telling you exactly. If you can identify these areas that I'm talking about, then you can get in a trade right at the area you really want to be. So if I understand that I'm in a buy on DXY, yeah, and I've entered off the spring test right here, and I know that there hasn't been a reaccumulation. Why should I even start to think, okay, Francis, I'm gonna look to close my trade? I'm not, because I understand the market structure. This is how you get to know that yes, I'm gonna hold this trade for that long. I'm gonna hold that trade for that long. So what is DXY? DXY is just the dollar currency. Can it be traded? Unfortunately, it can't be traded, but the spread on this DXY, bro, I'm sorry, you can't. You wouldn't even like to trade it. The spread is terrible. So I only use it as an indicator to trade the GU, EU, NU, AU, USD card, USD JPY, and USD chef. And those are big enough for me to actually enjoy enough pips. What about gold? Of course, the DXY has got a certain correlation with gold, but the correlation is less than 85%. And as a result, I don't like to even compare the DXY to gold. I'd like to look at gold on its own. The correlation is not good enough. It's not as strong as USD card and gold. I would rather use USD card as an indicator as to what gold is about to do rather than use a DXY. That is another nugget I'm pulling out right now. If you don't know what I'm talking about, go and back test it and you will get to know exactly why I'm saying that. All right, too much of talking. Now let's get to work with top-down analysis. What's the nugget? Okay, I said that I'd rather watch USD card and compare it to gold rather than DXY to gold. That's all I said. So now we're going on a daily chart. Again, on a daily chart, let's just focus our attention to this area. I want us to look at this reaction from this area and see what's happening right now. The liquidity created there, everywhere here as price was walking up. Now see what price did. Immediately we smashed all the liquidity on the upside. On the daily, now we can clearly see why price was dropping. Every point of interest that happened here, price was kicking it out. Price was kicking every single low out. Here, here, here. Because of time, I'm not going to draw it picture perfect. And this was the last area. And price got to the last area of liquidity and immediately it swept it. Look at the shape. Look at what's formed right now. What is this? In the chat box, please. Accumulation. Fantastic. Immediately price cleared the last liquidity. Look at what's forming right now. And as you go, you begin to understand exactly that everything we've seen on the monthly time frame, weekly time frame, daily time frame is happening in a space of hours. It's happening even on 1 minute time frame, 5 minute time frame. That if you understand your market structure and where you are in the market, you can trade it. will create a W, exactly what we're looking at right now. I told you, once you get to see that price has created its own liquidity and starting to sweep it, then we're getting ready to do what? To go up. Price created its own liquidity, and swept it. This is the sign telling you that DXY is getting ready to go up. Will this accumulation be a springboard for a buy? It has already created a spring. This is the spring right here. The spring broke market structure right there. Price went up, reacted of an imbalance. It's dropping back down. And well, why is it dropping back down inside this imbalance right here? Do you remember in the group chat, I think on Tuesday or Wednesday, I said DXY is heading towards 92,200. Who remembers that? And that is the reason why. However, I'm not going to change my bias, DXY being to the door. Can everybody hear me, please? My internet connection is starting to play out. Can everybody hear me? Good. Please explain information of ARBC. Okay, let's do the labeling for people. Let's write the full words for everybody to understand. So if I see BC by climax, SC sell climax, yeah, spring is spring. Have I put everything here? Yeah, I think I have everything here now. Oh, Matt is saying, is this what Nana was talking about when price meet time? Well, we're not there yet, but then you get to realize that institutional candlesticks are formed in a specific area that will make time meet it exactly where it has to be. In the London session, 8 o'clock. In the New York session, 1:30. That's what Nana was trying to say. If price is approaching an institutional candlestick between 8 a.m. and 10:30 in the morning, price is meeting time. That's all. Or time is meeting price. And those reactions are just going to be so smooth. You're just going to have it brilliantly. That's all. So looking in this area right now, I'm not going to change my direction and say that the DXY is now bullish. The DXY is whatever. I don't care. Until I see the W formed, the second part of the W formed, I don't care. I am still going to sell DXY. Does that make sense, guys? Until I see that shape form, I'm not going to change my direction and be like, oh, the DXY has finished. I see accumulation is done accumulation. So yeah, we're going into a buy. No, it will do what it has to do. It has to create that W, create its own liquidity, smash that liquidity and go away. That's all. Not just any W, man. The W I showed you is very key. That picture, if I were you, I'd just take a snapshot and put in front of my bed. Well, I'm trying to joke a little bit. But yeah, now we know the direction of DXY. I'm just going to leave it right here. Let's just understand that we are in accumulation area for the DXY. The DXY is selling down, and the reason is that we have liquidity build up down here. That's all I want you to know. And that's most of the talking I've done so far. There was liquidity sitting here. Price went up. There was an imbalance here. Price could have just reacted off here and go. No, it can't do that. It can't do that. But then look, if I should put a line right here and stretch it to the left side, look at the way price broke the mitigation area, came back to retest the mitigation area, and this happened on Friday. Everybody that was wondering the buys that was happening on GU, that was why. Sorry, this happened in this week. The buys that happened in this week, it was because of those movement that happened, that retest we had here, and all of a sudden the DXY started dropping. If you had understood this, that would have been an easy trade. You'd have been able to catch on GU, EU, NU, AU, and whatever. Because those movements were just so smooth. So now with all the match talking we have done, we know that there is liquidity sitting up here. And liquidity sitting up here. However, liquidity in all these areas has been smashed. We smashed all the liquidity that was coming down here. If you go on the 4-hour time frame, you can clearly see that we took away this, we took away that, we created an equal low right here, we created a low here, we created all these areas, and now we've smashed it. So now the worst case scenario, we're going to come into this rally base rally, this area, and all of a sudden I want to see price go up, and that is a W getting ready to form right here. So I see DXY still smashing this low. Now that we have broken all the lows, it's going to create its own W. So this area is a high risk area for price to come, smash its own low inside this area, and now we're going to move up. So DXY is now bullish after the clearance. Until I see that W formed, it's still bearish. Perfect. So somebody is trying to make sense out of what's going on EU already. So this is the top-down analysis. That's how I analyze the chart from monthly all the way to the daily. Then I start to scale into the smaller time frame and see exactly. So I'm not going to look for my point of interest below the daily time frame. I'm not going to look for my point of interest below the daily time frame, the 4-hour time frame, the 2-hour time frame, and the 1-hour time frame. But do you always see Wyckoff? No. Wyckoff is not the only schematic, and I always say this. We have different type of schematic. We have the 3-way schematic, the 5-way schematic, and Wyckoff schematic. Now I'm talking mostly using Wyckoff schematic, but guys, I'm going to be clear with you that there is another schematic called the 3-way schematic. There is another schematic called the 5-way schematic. And with time, I'm going to be explaining all those schematics and how they happen, where they happen in the market. For now, let's just understand that Wyckoff is playing a major role in the market. Sorry, can everybody hear me? If you can hear me, give me a 1, please. Can everybody hear me? Hello? Brilliant. Ah, finally, I'm back on. So, okay, can you repeat? Okay, so what I was trying to say is that there is the five-way schematic, the three-way schematic, and a Wyckoff schematic. For now, based on the analysis I'm doing, I'm focusing mainly on Wyckoff schematic. So I don't want to talk about the rest of the schematic. But that does not necessarily mean that if Wyckoff does not happen, it means that there is no reversal coming. Reversal will always happen, creating a Wyckoff or creating a freeway schematic. Oh my God. I think that source is too big. They don't want us to hear. Let me try and change my internet to my phone. Can everybody hear me now? Can everybody hear me now, please? Okay, good. So all I'm saying is, I'm going to repeat that. All I'm saying is, I'm going to say it fast before the internet goes away. There is a three-way schematic, a five-way schematic, and Wyckoff schematic. If you do not see a Wyckoff schematic, that do not mean that price is not going to reverse. You will either see a three-way schematic or a five-way schematic. And the shape of three-way schematic is like this. That is when usually in the mornings, especially for those that trade DAX, you see that price will do this, come down a little bit, do this, come down a little bit, push up again, and all of a sudden it does this. How many of us have seen this shape? Give me a one in the chat box if you've seen this shape. This is what we call the freeway schematic, and it happens. It happens a lot in the Forex market. Too many times. It is a very key schematic, but people do not pay attention to it. It's got its own skill to it, how to trade it, how to understand what is really happening. People don't really focus too much attention on it, and it plays people a lot. People begins to think, okay, we're creating highs, and by the time you realize prices just swept everything, you're looking to probably buy around this area, and your stop loss get hit. You look another institutional candlestick here, you want to buy, stop loss get hit. Another institutional candlestick here, you want to buy, stop loss get hit, and you don't understand why. The reason why it's getting hit is all because the freeway schematic is in play. And the five-way schematic is always in this shape. Price come down, go up, move down, create some sort of divergence, go up again, thinking that, oh, the move is happening, and price drop down, and then it finally goes up. So it creates this sort of shape with divergence here all the time. So I label this 1, 2, 3, 4, and then on the fifth area, price will just shoot up. Who's seen that before? Who has seen this shape before? It's some sort of W, but then the shape, you always see divergence on the first arm of a W. Yes, this is some of the schematics that do exist on the chart. And yeah, if you pay attention to some of these things, you're always most likely to catch the retracements. Most likely to catch the retracement that are about to happen. So on that note, I want us to understand that the DXY right now, if we see that shape form inside this rally base rally, this is what I mean, the rally base rally. So this area is my major area. If I should put a line here, I remember giving this zone out. So everywhere between 92.446 to 92.06, I want to see price starting to show me some sign of bullishness and going up. Before the rally beige rally, is that a valid DRB? You mean this area, drop base rally? Okay, the reason why I won't be looking at the drop base rally is because the rally base rally created that momentum to clear liquidity here. It wasn't the drop base rally that created the momentum to clear liquidity. So always, if you want to know which rally base rally or drop base rally that is really going to function, you have to understand that it has to have the momentum to clear liquidity. It's just like in the form of institutional candlestick. If an institutional candlestick creates and it don't clear liquidity, what that means is that that institutional candlestick is not going to hold. This is another thing that I want people to pay attention to. If you're not writing notes, if you're not taking notes of this area, man, you're going to come back and ask me that same question again. What the MC further left? Which one are you talking about? I don't know if you can annotate my chat. Just do that and let me see what you're trying to talk about, because I can't see the MC. If DXY is bullish, does that signify buy for US pairs? If you have a pair that comes before USD, then yeah, you can look to go vice versa on that. But if the USD is first, then it has to take the shape of what the DXY is doing. At least it has to take that form. And we see this more often on the USD chef. So now let's have a look. Let's have a look what GU is actually doing, guys. We have 8 minutes in the call, but I don't know if people have the time to have look at what's really happening on GU before we go. Before I finish this call, I want to at least talk about GU. I want to talk about GU at least before we go, please. We have, oh, somebody say we've got the time. All right. I've also got some few time. I can stay up until 10:30. Right. So looking at GU again, everything that we saw on the DXY, I want us to view this. I want us to view this right here, guys. Look at this box right here. What is this? Look at this area. Look at this area. Look at this area. And now let's pay attention to here. I need to watch this video over and over again. Yes, you have to, but with time, you're gonna smash it. You're gonna smash it with time with this. So if I look at this box right here, the first box right here, what does the box tell you, guys? The first box, accumulation. The second box is what? Reaccumulation. The third box is what? And then the fourth box is what? So now where are we? Accumulation. Wow, people are following this right now. I'm so excited already. So I'm not going to worry. I'm not going to worry too much about this, because now we understand the market cycle. We know exactly where we are. So if I'm looking from here, let's label it one. One is accumulation, two is reaccumulation, three is distribution, four is redistribution, and five is accumulation, right? So looking at it from those numbers, we know where GU is. So I'm not even going to worry too much about the rest of it. Let's just focus our attention here and see what's formed. Cell climax, AR, ST, ST, and somebody will be asking, Francis, why do you have two STs in this area? I have two STs because that ST did not clear the liquidity on the SC. Until I see liquidity cleared on SC, there is no spring. And I repeat, until I see price go below SC, there is no spring. The schematic is not complete. So wait patiently to see that before you begin to think, yes, now my accumulation has complete. For you to know that the accumulation has completed, the key is to see spring go below SC. So if I should drop a line like that, price had to sweep it like this. And this was a perfect, it still didn't clear though. What do you mean by it still didn't clear though? This is SC right here. Are you sure you're watching me? This is SC right here. And this is spring. So spring has just smashed it. Now guys, don't think like that. ST can always be above SC. ST can always be above SC. So don't confuse that. The major thing that you have to know is that spring has to go below SC. That's all. Which schematic are you referring to? I'm referring to the accumulation schematic. So is the spring always by a pin bar? Usually the spring on higher time frame is just going to form that bad wick that takes everybody out. And surprisingly, those wicks, they don't last. They don't last at all. They just go down, take everybody out, immediately price just move. Look at how bad it was. It's the longest wick on that area. Right? So now we understand that price has cleared that area. We understand that we managed to get the spring test. Now we've cleared liquidity on GU. So on the monthly time frame, everything is actually looking our way. Let's look at the weekly.
Hello, Dada. Good morning.
Okay.
You say, what?
We have less than a minute on the call. So guys, just like we agreed, if you're happy to be back on, I'm going to close this right now. Let's just jump back on. Let me finish GU and we can all go and do what we have to do. I need to sleep. So yeah, let's do this quickly, guys. See you in a minute.